Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, March 23rd, 2020. What I'd like to do in this video is go over a quick update on the charts. As I said this morning, not a lot has changed technically, and that doesn't mean that we can't have a big move in the market. It doesn't. It just means that pretty much we're right about the same levels right now as I do the video as we were when we closed on Friday, and so the market's still at or very near some pretty important support. At least, depending on what time frame you look at, I'm going to go over those charts, show you some, levels of support that have given way. And I also want to do this. I want to do kind of lay the groundwork for this week. I'm going to follow up. As I started last week, started to go over the various asset classes. I covered the equity markets in detail with both the long-term outlook via the weekly and monthly charts, as well as the near-term outlook, levels to watch. We hit a lot of those early bounce targets on the markets and the indexes on Friday. Then we turned around and reversed. And I also want to go over, and I will in a separate video, I'm going to do an update on the other asset classes, such as precious metals, including gold. That's our sole active trade right now. I still like that trade. I think it looks good. I'll go for gold, silver, maybe some of the other metals, as well as currencies, because where the US dollar goes has an impact on gold. Or normally does have an impact. And I want to also go over commodities and do that in a separate video. A lot of agricultural commodities. I think that's where we may have some opportunities coming up going forward. A couple things that make commodities attractive. Number one, they are coming off a multi-year bear market, and maybe they're still at those lows. Too early to say they're in a bull market, but what's nice about that is they're beat down. And the other nice thing about commodities, no matter what happens here in the stock market, I will go over. I can sit here all day long and make a bang up bearish case that the market's going a lot lower. We could, I think if it does, I'm more worried, to be honest with you, I'm more worried about the credit markets than I am the stock market right now, as far as worried for the economy and everything else. Credit markets already showing signs of a lot of cracks recently, and that's if the credit market sees up, then that's you're talking close to financial Armageddon there. So I could sit there and make that case, and it's valid. I can tell you that right now. If this coronavirus thing continues to get worse, not better, more importantly, and I'm going to talk on the fundamentals, if the impact that it's having on the markets and the economy, with businesses shutting down, people staying at home, not spending, if that gets worse, that's where things get worse in the financial markets. But of course, it can go the other way. So we're going to have Plan A, Plan B. I'm going to talk on that, and I'm going to talk on some potential catalyst or catalysts, plural, that could trigger not just a relief rally or abatement in the selling, but could actually spark potentially one of the biggest rises or spikes in the stock market we've seen maybe in history in such short order, if all these things come together. I think the potential is there, and I don't want to miss it, and I want to lay out what to look for, and if things happen and they happen quick, then what levels to target, because that's one thing about this market. You got to be fast. There have been just a ton of opportunities. I mean, just from last week, where I started pointing out these divergences that we're setting up in the indexes. We're looking. This is NQ, the 60-minute chart, divergent low. That bear trap scenario, we rallied over 10% from there in short order, hit that top of that target zone, and then turned around, and this drop was like 10% plus. And even from the lows yesterday, last night, this is Sunday's trading, we rallied over 10% in the NQ, and a lot of that was just a quick spike due to the Fed, announcement of the latest, Fed efforts to intervention to prop up the markets. So again, there's a lot of money to be made, but also lost in this market. But I'm going to point out some of the bigger picture stuff for more investors, trend traders, things to watch. All right, so to just start out here with the stock market, one of the most important levels that I've been watching lately and highlighting is on NQ. Remember, I had to roll my charts. The chart that I was using last week and leading up to that were the March contracts. They stopped trading on Monday, so I'm sorry, on Friday, and we're now on the newer contracts. So these are the same basic levels here, but the numbers might be a little bit different because now we're on the continuous contracts, now the June contract right now for NQ and ES. So the levels I'm watching are still that on this chart. It's the about 6,900ish level right there. Numerous defenses of that level. There's a little whipsaw bear trap last was Wednesday, and then we closed down there on Friday after a heck of a reversal. We ran up, hit all those those targets on the SPY, IWM, QQQ, NQ on Friday. Then turned around, had a big reversal, but we closed right on support. Then Sunday night when the futures opened up, they, futures fell. They hit the lock limit down 5%. Started to drift back up in the morning. That's when the Fed came out. Of course, they do it in pre-market to burn all those that were short. And that's what I said. I made clear that Friday, I went home for the first time in a while, flat. Felt good to be, not in cash, not having to worry if the market gapped against my position or moved big over the weekend. And so I'm going to pick things up today and take a look at the charts. I still think it's time to, a good time to keep things light if you are going to trade. And if you're not a very active trader, you don't need to trade at all. Don't try to, don't try to trade this type of market. It's not where you're going to cut your teeth trading. You're going to get cut to pieces. I'll share the levels for those that are active traders. And right now what I'm watching is this uptrend line. It's a minor uptrend line right here on the futures. I can draw it that way. Fits pretty good. Let's zoom in so you can see it nice and clear. This is NQ again. I will get to QQQ here in a second. So there's your uptrend line. And I can also draw what I call a BOD, or benefit of the doubt trend line, coming in capturing those lows. So you can replicate that. Break of that could open the door to more selling. Otherwise, and as I'm leaning this way, I'll tell you, I always tell you where I'm leaning, even if I don't have a strong conviction, that we'll probably bounce here and run back up, maybe make another run at the trend line. But ideally, you want to see NQ get back above this 69.16 level. We had a little whipsaw there. This one was a little bigger last night in the futures. Here's the government manipulation, the Fed coming in. So again, this is a tough market to trade because you have it's a very much a news-driven market. The technicals are working, but they can be overrun by, in other words, this breakdown here proved to be a false breakdown when the Fed came out and made that announcement this morning, but now we're back to support. So like I said, I think there's better fish to fry right now, or keep it easy. And I'm going to get to in separate videos. I will go over gold, various commodities, and all that other stuff. I just wanted to start out here with the futures. Let's look at ES. ES, this is also a 60-minute chart. So probably the most salient levels on this chart are the downtrend line. We have that those downtrend lines on the 60-minute charts, and NQ just hit its this morning. ES reversed a little shy. There's the trend line. I can draw a benefit of the doubt trend line. So there's your two trend lines right there for ES to watch. And like I said, breaks that, then all you have is that low there. Now let's look at SPY and QQQ. Again, we're just kind of doing quick overviews here because I want to talk on some potential fundamental catalyst things that to look out for. SPY, this is a 60-minute chart, and it's not showing the after-hour trades. Remember that T1 was hit in the pre-market session on Friday when everything else was hit, and we've moved lower. And just like we had a divergent low there, and just like we had a rally from that level, the markets rallied from that low to hit T1 in pre-market over 10%. So we had a 10% rally. It's not as if these positive divergences didn't work. Again, I keep using the word, or the analogy of trading this market right now is like it's swing trading or even trend trading with the fast forward button on max speed. You're going 10 times fast forward speed. You can get, if you're quick, you can get in, get out, make 10%, turn around, reverse. It's not always easy to get them all, but the levels, it's amazing how well. And again, we're not showing pre-market trades here. You can see those more in the futures. How well the technicals work, because that's what traders flock to in times like this. Because everybody, all the fund managers, individuals, they're all trying to figure out what is the impact. How are the fundamentals of Apple, Microsoft, Facebook? How are those companies? How are they changing day by day, minute by minute? And it's hard. We know it's not good, especially for certain industries, airline, hospitality, even tech. Of course, tech's much more immune to this than other industries because they don't have the open storefronts and things like that people are avoiding now. But yet, you go into recession, people are going to buy a lot less iPhones and $3,000 Macs. So, and talk about also the supply chain disruptions. So there's very few companies that are going to be unscathed, but there are opportunities here, and we're going to talk about that in this video. One of the opportunities last week. Yeah, and the video was dated March 12th. That's when it was actually. I mentioned Amazon. This was in this video. You can see the tags. This is the only individual stock I mentioned. I covered the stock market and LQD or LQD trade, and that was it. And I picked one company saying, look, there's going to be companies in here. The baby gets thrown out with the bathwater during a drop, and I said Amazon was at support at the time, 1693. And there is one company that actually net should at least benefit somewhat from this, because you're going to see more people staying at home doing their shopping on Amazon. Those people that normally work in an office and commute and will swing by on the way home to stop into Best Buy or Walmart or wherever it is they shop, since they're not going out and they're avoiding Best Buy and Walmart right now, that's where a beneficiary. Now, Amazon rallied from there. It dropped a little bit lower. Here, we'll look at the chart. And again, so this is what I'm going to be doing this week, is starting to get back to, okay, enough on, I've been hyper-focused and will remain very focused on the stock market, but also start looking at the opportunities. Amazon dropped about I think it was from there, maybe less than 4%. From that support. So yeah, well within a reasonable stop, and then rallied from that point there about over 20, I think about 22%. And you can see that Amazon is well off those lows a couple weeks ago, because as it should be, a lot of people are buying on Amazon. It's easy to get if you want toilet paper. My wife, I think 2 weeks ago, ordered, I don't know if it came in yet, toilet paper and hand sand from Amazon because the stores were out. And why not? Why keep going back to your local grocery store, checking every day to see if they have those items. And again, so their point is there's going to be opportunities here. And, sooner or later, this thing will, again, that later can come a long way or it can come very soon. I'm going to get to that in a minute fundamentally. So I'm talking about the whole COVID-19 coronavirus thing. It may blow over, and there may be the potential for an explosive rally. I'll keep it very simple. Again, I don't know if I've said this earlier, but my biggest risk or fear is a collapse of the credit markets, which have already showed cracks, more so than the stock market. Stock market can snap back fast and go down quick, but credit markets are very, very important, and that's, we'll be watching treasury bonds, TLT, things like this, and I'll maybe talk in another video about money market funds, the safety and stability, FDIC, maybe the benefit of putting money in banks if things get uglier. So I will talk. I'm not going to spend a lot of time talking about the downside to this market right now. I want to talk about, because that's there. We all know now, as I said, this situation is getting worse, not better. When you read the headlines, more and more companies laying off people, their cash burn, small businesses are going to be out of business soon if things continue at this rate. But I want to talk about some potential positive developments and where we might be heading. And let's just jump into that real quick. Let's look at these long-term charts. This is the SPY weekly chart. Like I said, SPY right now is in what I call technical no man's land. It is between support, which is now resistance. This was back before it was the next support zone when we were coming down to it. We paused there for a little while. So now it's actually resistance. And where no man's land is what I refer to when a security is smack between support, which is around 212, and resistance, about 232. And so, opens the door for the next bear market target. However, right now, at this point in time, I think there was an objective long to be made right here. And so while I'm keeping things light, we have these trend lines. If we can hold these lows, we could bounce. I think, if you're an active trader, you can go long here with a stop not too far below. NQ, similar story. There's NQ. There's the trend lines I started out and showed you earlier. But let's get back to these weekly charts and let's talk about Let's talk about the potential bullish scenario and a potential bearish scenario, because I'm not going to sit here and tell you with the highest degree of confidence which way we're going to go, because I don't know right now. When I have a pretty good convictions, I tell you. When I have strong convictions on where the stock market or stock is going, I tend to put that on as an official trade idea, because those I have a higher degree of confidence in, and I expect them to last a little longer, or even if I expect it to be a very quick trade. Yeah, typically what right side of the chart is about, at least on the home page. Forget about the trading room. I'll post day trade ideas in there all day long when the opportunities are there and I have the time. But the front page of the site is trend trades, swing trades, investing ideas, but again, in this market, we're getting 5 or 10% plus trends in a matter of days here, just in the stock market alone. And so you're going to see ideas, official trade ideas, sometimes that hit their targets real quick within a few days, like we've seen recently on LQD and some of the QQQ trades. So that's it. So if we go down, you can see the next support, and it's really good support for the S&P 500 is here. My minimum bear market target around 212, and that's defined by the highs back from late 2014 all the way into 2016 there, and we broke out and back tested. That's a bear market target I've maintained for last couple years for when the next bear market started. Even when we were in a bull market, I acknowledge, look, we're not in a bear market now, but that's my targets. And so this would be my current maximum bear market target. So another way to spin it, that's, I think, worst case scenario that we see, or I'm sorry, not the worst case scenario, but a likely scenario, whether we bounce first or not. But let's talk about the potential for what might be the catalyst for a rally that could be potentially explosive and take us from the lows where we just bottomed recently all the way up here. Then I'm just going to tell you now, this would be a potential bounce target. It's 260, and that's about a 20% from the lows the other day. If I can grab the bottom of that candle there, it snapped to it. It's about a 20% upside, or yeah, 19, 20. Close enough. And then on QQQ, okay, so I've showed you downside and upside. QQQ is holding this line here. Really shouldn't, it's not so much of a support line as the other ones. This was more of a support zone here, about 169.30 up to about 173, defined by these reaction lows. So QQQ is still holding that. And again, I just showed you that on the NQ chart. And if futures paint a better picture, because they'll show you what's happened on this 60-minute chart, just how many individual separate tests we've had of that level, including the fact we closed there on Friday. Futures went down, but then this so far has proved to be a bear trap because it popped up, ran into the price resistance and trend line, and we're back there now after falling below it again. So here's another potential bear trap scenario in play. Or maybe this is the real deal and we break down. I don't think it is. I'm leaning towards another thrust up. And let me show you some fundamental catalysts. Let me go back to QQQ before I do that. And then we'll talk about why you might want to get ready and how you might want to trade it if we see some positive developments in really with COVID-19. It's all about COVID-19. So when I say positive developments about COVID-19, take that to mean positive developments in the stock market, because depending on how positive the developments on COVID-19 might be, the rally ranges anywhere, the potential range is anywhere from a nice, strong, tradable rally to a potentially explosive rally that could bring QQQ up here about 15%. Maybe more. I had about 19% upside in the S&P 500, and I maintain that. So in that case, there might be more upside for SPY. And why would that be? Well, because the SPY got beat down more. SPY has tend to have more restaurant stocks, hospitality, hotel stocks, maybe cruise ships, Carnival. I think they might be. I'm not sure if they're in the S&P 500. Things like that. And so what could cause this 15 to 20% rally? And again, if it were to happen, would it be it could be potentially in a single day. And I know you probably think, Randy, you're freaking crazy. The market ain't going up 20% in a day, not even 15% in a day, maybe 2-3 days, maybe months, or maybe we just keep going lower. Look, guys, I know you probably hate to hear that maybe, but we're going to tell you right now what could be the catalyst for it. Okay, one of the catalysts could be But I firmly believe it would not be the only catalyst that could get us anywhere even close to those 15 to 20% bounce targets there. About 196 ish on QQQ, and then whatever that level I showed you on SPY. And those would be, at least at this point in time, my initial maximum bounce targets. If we get some good news soon. So what could be it? Well, I don't think it's going to be anything from the Fed or any bill that was passed in Washington. They're talking about putting money in people's hands for that are laid off, backstopping small businesses, loan. They're working on the details of it. But I'm a firm believer the economy. It's all about COVID-19. If this continues, if businesses continue to stay shut down, the U.S. economy, the world economy, continues to be partially shut down as it is. It's way, 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 way too big for any government to come in and backstop it. The Fed, and the U.S. Treasury can print as much money as they want, put money in everybody's hands, and then in that case, you're just debasing the U.S. dollar. Treasuries will sink in price, yields will soar. It's a catch-22. There's only so much the government can do. Again, the global economy and the U.S. economy is too big. Sorry, I'm just sitting here looking, and sometimes these divergence lines go away in different boards. I just want to point that one out there. But what I was getting at is the catalyst that I think what it's going to take to get a big reversal in this market, and I really hope it comes soon. You guys know I love shorting. I've talked for years. I am an avid short seller, just like I love going long stocks. But when you go short, you have the potential to make more money in short order because stocks tend to fall a lot faster than they rise. I've said that hundreds of times over the years. And here's a case where in just a matter of a couple months here, we've wiped out over 3 years of gains, took the S&P 500 back to where it was. Now going on, if we get much lower, hit my bear market target, we're going to be back to where we were all the way back here in 2016. Then you're talking about, almost 4 years of gains being wiped out. Yeah, close to it. Okay. All right, so let's get to what one of the catalysts could be. All right, so my wife works for a large multinational pharmaceutical company, and she's in a pretty high up position, so she's in contact. A lot of her clients are doctors and heads of medical plans, hospitals, things like that, and a doctor she knows is in has a very large. He owns multiple practices. It's not just his patients. He has doctors underneath him, practices, owns pharmacies, and he has a study underway. She shared the results with me, which are nothing but seem absolutely phenomenal. I'm a little. I'm always a skeptic with everything. I think I would have heard more about it, but I did do a little research and found some more about it. And basically, I'll tell you what the study is all about. And where this could go. Okay, everywhere you see and read and hear, tell me if you've heard otherwise, they say it's at least a year away from a vaccine for COVID-19. That's with all the resources, all the money in the world thrown at it, you're looking over a year for a vaccine. So I think the market's come to grips with that. However, what we could be looking at is, if not an outright cure, something that an effective drug, or in this case, combination of drugs that are effective in either eliminating or reducing coronavirus, maybe stopping the slowing it down. Think of something like comparable to Tamiflu. When you get the flu, you can go to your doctor. If you take it early enough, Tamiflu will severely mitigate the symptoms. It usually doesn't completely stop the flu in its tracks, but it will make a what could have been a very bad flu like a mild head cold or whatever. And so let's talk about this study. So the study that this doctor here is doing, and now I was able to find that it's not just by the way, the FDA has just accepted his study, so it's underway right now. It is a combination. It's using combination therapy. If you guys have followed what's going on with the drugs out there, there's a malaria drug. It's been around for many years. You can look this one up. I believe it's been around over 50 years. It's called chloroquine. Chloroquine, and that's, well, we'll get to it in a second. You'll see the spelling. And then there's a variation of it called hydroxychloroquine. They are, again, malaria drugs. There's a few other uses for it. It's been around for a long time, and there's been a lot of mixed results, on the effectiveness or the efficacy of using that against COVID-19. However, there's also some studies out there, including the one that I just brought to light here, from a doctor that my wife works with, and now I found on the internet. I didn't know if it was information I could share or not, but obviously I'm going to share it because here it is, the same combination. So this is here it is. This is dated just March 19th. I don't know the source, but again, I know that this confirms everything that I'm hearing. French study finds that anti-malarial and antibiotic combination. So this is a combination of the anti-malarial drug and just a common antibiotic. You guys have probably all, if you have kids, especially, I know my kids have been on the antibiotic here. It's a common one, which is a good thing because now these aren't those, sometimes you read about how, biotech company has come out with this new niche drug for multiple sclerosis, but it's $20,000 a dose, and there's a lot of feedback, pushback on it. So these are common drugs. They can be mass produced, and where I'm going with this, guys, is please understand whether or not this is a combination that sticks. These studies are early on. If you're not familiar with studies, one of the things that I'm taking it with a little bit of not a grain of salt, but just interested in following this, is studies need to be done over a period of time, and you need to have a large sample study. So it's the N, and that's the one thing I asked my wife, and she didn't know either. The N in the study. The N means, in a study is a number of patients in the group. So you can read through this. I'll post this article below this video. You can read through the study, but here it is. They performed, and again, this is a very small sampling group, a study on 30 confirmed COVID-19 patients, treating them either with hydrochloroquine on its own, a combination of hydrochloroquine with the antibiotic, which if I didn't mention, where was it? It was up here. There it is, azithromycin, very common antibiotic. So you had either just the chloroquine or hydroxychloroquine, or the combination with the antibiotic, or nothing. So you had a placebo group, and you look at these results here. Here's the combination right there, day 5. Again, I'll have to get the scientific and what's the p-value reading and all that means, but what I understand it to be is pretty much it stopped the virus, or maybe the shedding of the virus. And so now the problem with this, again, you're talking, out of that, 20 of the 30 participants in the study received the treatment. They go over a whole thing here. So again, extremely promising results, but the problem is when you have a small sampling group, it could be randomness there. For example, you're reading that some people walk around with this thing and are asymptomatic. They don't know, they don't show any symptoms, they don't know they have it, but they're passing along to people. Other people get it, and 48 hours later, they're on a respirator or dead. So this thing can vary widely, and again, that's what a longer term study, and that's maybe why some of these aren't really being released yet. They don't want to get people too excited on something. And then the other thing is too, what I don't see here is, when you look at these patients, I'd like to know from kind of my, just analytical mind, okay, of those that are on the combination therapy here, what were the comorbidity factors? In other words, did any of those patients have obesity, diabetes, any other heart complications? Because those are the people at more risk. Or were these healthy people? Were they 30-year-olds that, marathon runners, those that got it? So those kind of things will also go into play. But at the end of the day, it's hard not to be impressed with this. And again, it does mesh with what, this is the French study, it meshes with what my wife told me this doctor here is seeing as well, using this combination therapy. So now, where did I go with all this? Look, whether or not these two drugs in combination are putting a are putting a damper on this coronavirus. Again, whether it's something more along the lines of Tamiflu or whether it has even better results to stop this thing in its tracks. Whether or not this one pans out to be, think about every research scientist and doctor in the world. This is the biggest thing. They're trying out, I would imagine, every type of combination. So although a vaccine is over a year away, maybe a cure or a partial cure, something to put a dent in this thing, is much closer. And I like to believe that it is. One reason we can't go on at this rate, if the infection rates, continue, the hospitals get overrun, it's going to be a bad thing. So if a study like this all of a sudden comes out, because they're doing these studies, they usually keep, I guess I don't know how tight a lid on some of these, maybe, and all of a sudden there is a again, I don't want to use the word cure because it's probably not the right word, but an effective drug combination that comes out, and people feel safe. Okay, I can go out now. If I get this, or if I bring it home to my elderly mom who I take care of, I know that she has a good chance, or at least if I'm infected. And there's also the rapid test out, which has just come out. You guys probably heard that. So that in combination with this, so let's say people start going back to work, saying, okay, I'm healthy, I can risk going to work. I can't risk giving it to my grandma or mom, but I can go to work. I can do this test kit if I'm feeling bad or I want to just randomly do it. And so eventually that's going to happen. And when people start going back to work, and when the planes start to fly, and the day the cruise ships start booking and leaving port again, it can happen gradually or it can happen fast. So we got to be ready for that. And I want to throw out that here is, because it's going to take, at this point in time, I can tell you what the charts look like all day long. I can show you possible or potential downside targets, upside targets. I can show you bullish and bearish developments, divergences, overbought, oversold conditions. But at the end of the day, it's going to take, the fundamentals are going to have to change here. People are going to have to go back to work. They're also going to, as time goes on, and people and businesses are doing this, certain businesses can work around this, can work from home, video conferencing, other things like that. An example, I don't know if I said this one earlier. I tried to record this video earlier today and it just went on too long, so I stopped it. So if I already shared this example, forgive me. But my wife and I went to a restaurant yesterday. One of our favorite Mexicans restaurants, and it's usually not that busy, so we figure, okay, we'll go in, grab something to eat. And they had the chairs up on the tables. They said, look, we're open, but you can't eat here, it's a takeout only. And I asked them how business was. They said business is booming. I sat there. She had to take the gal at the register. It's a small little place. She had to take 3 phone calls just as she was taking our order. She said everybody's calling, they're ordering out. They're doing pickup, or she said we're getting a ton of Uber Eat orders. So what I'm saying is businesses will adapt and evolve. So that restaurant, if anything, their business has gone up. And yes, that is one example. It's not going to help Delta get planes off the ground. They can't, Delta can't, Uber people from New York to LA in lieu of getting on a plane. So that's not an option for them. But I just want to make mention that the world will keep spinning. And then on that too, and I'll wrap it up here, what I'm doing is I'm going to be doing a lot of digging on this. I want to see the chloroquine. There's a couple companies that make it, some that are authorized to make it, some generic companies, and then of course there's hydroxychloroquine, and there's another one, I think they mentioned it in here. There's an this chloroquine's anti-malarial. There's also an a drug for Ebola. Here it is, from who was it? I'm drawing a blank here. I think it was Mylan Pharmaceuticals, if I'm not mistaken, that makes the Ebola drug. But again, going back to my point here, is that there's a good chance, since this is we've never seen anything like this in the world, that somebody's going to come out with something that puts a dent in this thing. And when it does, if it makes, if it can slow down the spread or completely, they get a handle on this thing, businesses, everything is going to flood back quickly. People are going to start flying because they need to and all that. So don't underestimate the potential explosive and how much the market will reinflate. I don't expect new all-time highs anytime soon, and maybe not for years, at least at this point in time. But I showed you if we can capture even the bulk of a 15 to 20% rally, great. Now, that's not all I'm selling here, and I'm not selling it. It's a potential, and we'll be ready for it. The flip side of this is nothing short of, like I said, the thing is, I look at the charts, and there's a little more downside I can see if the stock market hold up, but I'm really concerned about the credit markets. And as of now, the Fed's throwing a lot of money and liquidity in this system, so I think the credit markets, for the time being, look stable. And that also helps, I think, our gold trade. Like I said, we're still, long gold, and I got to get the right chart here. I think the big part of the big sell-off in gold recently, I think, was a liquidity crisis, a lot of margin selling, forced selling, and so we're doing good. We're up another 4% on our gold trade today. And again, because I'm seeing, the credit markets are starting to stabilize. We're back to that T2 target. If you didn't take profits when we first hit it right after the day after we entered, here's another chance. But I'm still, like I said, I think we got in on a good price on gold, and I'm going to hold that one. And probably if we get anywhere near T3, I'll extend that. But again, I'll follow up with another video on the precious metals, more detailed analysis. I wanted to get kind of that out to you guys. Oh, and then before I wrap this video up, show you, things that I'm looking at, and I've started to nibble at these over the weekend. I've been looking at some of these small specialty and generic drug makers, and trying to figure out, okay, because it may not just be the erythromycin, if I said that right, and the chloroquine, those companies that are going to be manufacturing that. There's going to be other drugs out there used in as people, hospitals are stocking up on these things, antibiotics and antivirals and things like that. And so there may be some gems here within that sector. So some of the ones I like are Mallinckrodt, MKND. Friday, remember, the market was down big, but this one was up really big. It's been moving up lately. Chart looks decent, coming up to resistance now. Another one I like, and I took a little start on, SNOA. This guy's been moving up nicely as well. Sonoma Pharmaceuticals. I haven't even dug deep down. I want to go to the fundamentals, see what these guys are making. And some of these companies may be, tasked to make a drug that they haven't made before, if they have that capacity. So I'm not speaking yet on the fundamentals because I have to, take a look at that. And that takes a little more work than, doing your due diligence from a fundamental perspective than from a charting perspective. I can look at the chart and analyze it relatively quickly, but I do see potential in some of these stocks. Another one was MYL. Now that's Mylan. They're not the one that made the Ebola drug, I don't believe, but they are one I'm watching. It's been moving up lately. MNTA, another one on my radar, just bounced off trendline support here. And actually it's held up. Well, it got knocked down like everything else, don't get me wrong, but relative to the moves in this stock, it's still closer. It's not, relatively within earshot of its all-time highs there. And again, it looks okay on the charts. And then Teva, I like Teva as well. Teva's one I've shared on the site in the past. I believe the last time I would have shared this one was a long setup back here with a breakout above this level, came back tested this 646 support, and from there the stock went up. I don't know, it was probably 120% or so, 118% from there. It's pulled back and hit that 646 level the other day, and it's been climbing steadily since. So again, these are the things I'm watching. As a stock market, the S&P 500 is still testing or just off its, those the recent lows. QQQ still just clinging to that support it's clung to for last week. Here's a company up 28%, and I know that that I will make no guarantees to this, don't get me wrong, but I know the nature of this company. I've traded this company many times over the year. You can see on my notes, go back, divergent lows. I go long, look for short opportunities, in overbought situations and breakdowns and all that. And I can tell you, this is the type of company, if the fundamentals are right and they've got something cooking right now, this thing could go up another 75%, possibly. Now, if the whole market melts down, the whole financial system breaks down, credit markets break, the stock market's going down another 20-30%, Teva's probably going to face some headwinds. most likely, not necessarily, but most likely. All right, so these are the things I'm going to be working on for you guys this week. I'll try to get to questions as soon as possible, but I want to follow up on those additional asset allocation videos by covering the fixed income. I'm sorry, we already did fixed income last week. Commodities, agricultural commodities, industrial commodities, gold and precious metals, currencies, and maybe Bitcoin if there's an update to be had there. So as of now, let's just watch those lows. Like I said, I still think the risk reward is not very favorable at this point in time to be short. And again, that in no way means we can't plunge or go down. Really, there's no really downside maximum. But I'm just seeing a market that more so on the NASDAQ 100 has just been defending support and bouncing down, refusing to go down anymore. And again, I think that is, as I said last week, a function of, among other things, the fact that the VIX is, still pinned, extreme highs, multi-year highs, put-call ratio is very high. I don't think we cleared out enough short interest and bearish sentiment last week, especially with that dump into the close at the end of the session. So there it is. That's what I'm looking at, and I'll wrap this video up now, get it out to you guys. Gosh, this one went about as long as the last one, but hopefully it's good stuff. And again, I'll follow up with some individual trade ideas, anything that stands out other than what I showed you in this video. This has been Randy Finney with Right Side of the Chart. Have a great day.